Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. And it seems like the bulls are a little lackluster today. Once more, second day in a row, we are seeing a little bit of tentativeness among investors as we are sitting closer to those record high levels. And this is despite the fact that globally markets are doing quite well. I mean, if you look at Asia, most of Asia, including China, Europe also today, is doing quite well. So therefore, it seems the outperformance Santo has turned on its head and we have started underperforming in the past two sessions. And if you can see that in the Nifty and Sensex, although we have recovered from the day's low, we are still considerably off the day's high that we have started off at the beginning of the day. Apart from that, the only space where we are seeing a little bit of strength and outperformance is coming from the small cap names. Surprisingly, they are outperforming both the mid and large cap names for the second consecutive session. Rupee also has seen a very dramatic recovery in the last 1.5 to 2 hours after actually starting the day at a lower end against the dollar. It has now recovered most of its losses and it's actually trading higher against the USD. So clearly, Santo, a mixed bag sort of a session for the market and not really much to take away from it.
Definitely, CJ. But first up, apologies to our viewers for this delayed start because of a technical glitch. Well, CJ, that said, the near-term trend clearly seems to be intact. That's been the case for the last many days now. You've seen the occasional correction, but market is making a very strong comeback. So liquidity remains very strong. It's a liquidity-driven rally, and of course, the cleanest shirt in the laundry theory, which means that India is better than any other economy at this point in time as far as macroeconomic fundamentals go. So that is attracting a lot of foreign money. Now I wonder what will happen once the Nifty tops 18,600. Probably that is when you could see both FIs and DIs turning bullish, because at this point at least the domestic money seems to be a little skeptical that the market will be able to make a new high. That largely could explain.
Yeah, it seems like this area around that 18,200 to 18,400, 500 seems to be a major supply zone, wherein a lot of people who are sitting on decent amount of profits are thinking that maybe this is a very good point to take some profit off that table. You never know where the market can go. It's good to probably have some cash in hand just in case I might get an opportunity, a 5-6% odd correction, you might get it and you get to buy the dip once more. So clearly, I think, Santo, there is a little bit of profit booking happening in the market. We can sense it in the large cap and the mid caps names in particular. But from here, the market can go, it's you are at an inflection point. Either you can go down or you can go up. But if we do cross the record highs, as you mentioned, I feel that probably then we will start seeing a new wave of buying altogether.
The fence sitters coming in and probably the last bears losing hope. Well, that said, a quick look at the FNOQs. We are seeing a build-up of short positions in futures of Coal India, NMDC and GMR Infra. There's one more stock I wanted to mention, but since CJ has taken it up, I'll keep it for later. Also, short covering has been seen in futures of Gujarat Gas, Deepak Nitrite and Crompton Greaves.
Well, thank you, Santo, for those FNOQs. So let's move on to the stocks that were on our radar today. We have 5 names for you, 3 from Santo, 2 from me. And kick it off, Santo.
Well, Container Corporation is the first stock on our watch list. Well, the second quarter numbers were on expected lines. Now, the positive element here being that the company has maintained its volume guidance of 15 to 17% growth for this year. Now, there seems to be a bit of confusion over the land license fee at this point in time. The market is still awaiting some clarity on that. But that said, most brokerages are bullish on Concor at this point in time, Jefferies, Nomura being among the ones. And the key triggers for the company at this point in time is, first of course, there is privatization, and then there is also the full commissioning of the dedicated freight corridor. A part of it has been commissioned at this point in time. So when the full line is commissioned, that obviously will work to Concor's advantage. CJ.
Well, Santo, I think if you look at probably why the street has not been very euphoric after the company's Q2 numbers, is largely because if you look at the numbers in general, they were actually below what the street was expecting, at least as far as the net profit and the operating profit numbers are concerned. And also there is now a different opinion emerging on Concor that maybe valuations have run up too much on the hope of course, the expectations. You talked about privatization, you talk about the relief on the land lease policy, although some confusion remains there, but generally it's seen that that policy is moving in the right direction. Now, if you look at what ICICI Securities had to say, and it was really quite telling what they said. So this is a brokerage, of course, which is a sell rating on the stock, of course, which is almost on the contrary into what the market has at this point of time. Now they value the stock Santo at 26 times FY24 expected earnings, right? And they say that this valuation is actually 2 standard deviations more than the forward valuation that Concor has had in the past 10 years. So even despite valuing it at more than 2 standard deviation, its price target is actually 625, which means from current market price is actually seeing 18% downside over the next 12 months. So that goes to show to you the extent of probably overvaluation that Concor has at this point of time in the market. And I think that is one of the reasons why ICICI Securities has retained a sell call on the stock following the company's second quarter numbers. So I don't know if there is too much upside left in Concor. Maybe a lot of the hopes and expectations are already baked in, and now what the market would desire, Santo, is execution.
Well, CJ, that was a very mathematical defense in favor of your view, I would say. But then
I can't trump you with words. I am trying to trump you with numbers.
Well, but what has happened in the past, need not always repeat. Probably there can be things can
change.
Begin with a fresh start. Well, that said, next stock.
Well, the next stock, Santo, is IRCTC. Now, if you look at IRCTC and if you look at its reaction to the numbers, you would seem like the company's performance were actually awful. But it was really not. I mean, if you look at the numbers for what they are, it was actually a very strong performance, especially if you take into the fact that Q2 usually is a seasonally weak quarter for IRCTC, because you are coming back from Q1, which is generally, you have the summer holidays, there is much more traveling happening around the country compared to Q2 when there is monsoon and the amount of traveling goes down. So sequentially, a lot of people have been saying that, sequentially the numbers have been so poor, but that is largely because of seasonal factor. And if you're looking at sequentially, then you ought to also look at the fact that Q3 and Q4 could turn out to be very excellent for the company, especially without any COVID restrictions, because that is peak travel season within India. You know, December, January, February are usually when people are planning their vacations across the country. So I think the outlook for IRCTC at this point of time is pretty good, pretty solid, fundamentally speaking, but you are not seeing that in the stock price performance. The stock has corrected about 18% in the past year, and therefore I think for me, the risk reward is looking quite attractive from here on.
Well, a lot of short positions also getting built in IRCTC at this point in time. CJ, the sense that I get speaking to people in the market is that it's not so much about IRCTC's earnings performance. In fact, if you look at it over the last 5 quarters almost, the earnings have been steadily improving, right? And the stock kind of peaked out in last October.
Yes.
Typically what happens is before the earnings peaks, the stock price tends to top out. That's been the general case, and after the stock has topped out, of course you only get to know it later. A couple of quarters later you will find that it's peak earnings, but in the case of IRCTC you are seeing a continuous improvement. So that probably could be explained by the fact that now market is relooking at the valuation that it is giving a stock like IRCTC. At the peak of the bull run it was given a and rightly so, the valuations of a platform company, right? But now that does not seem to be the case, because nothing else can explain that. Secondly, the flip flop by the government on the
OFS, yes.
On the OFS, as well as there was this issue about the fee on the ticketing charges, right, which was then withdrawn hastily. If you notice, last June institutions, that is FIIs and domestic, held close to about 20, a little over 20%. That has now come down to just about a little over 11%. It has not, despite the steady improvement in earnings, you are not really seeing institutional investors come back in a big way.
I think, Sando, one of the major reasons also, you talk about flip flops, of course. One of the major arguments that was made when IRCTC was being valued as an internet platform company, and this is something that was also extended to CDSL also, I remember, is the fact that IRCTC is sitting on gold mine of data, right, in terms of personal data, in terms of the capacity to monetize data that IRCTC has because of its platform, the ticketing platform that is. And everybody thought that, that provides optionality in the sense that they can, in the future, monetize that data. Now, you remember, I think earlier this year, the governments who had appointed a valuer for that data, and the valuer has said that if you were to go ahead, you're sitting almost on 10,000 crores worth of data monetization potential. But that report was also, withdrawn. That step that, the company had taken or the government had taken was also later withdrawn. And that,
Of course,
probably
data
gave a bad signal.
privacy.
Yeah, exactly. And, that gave a bad signal to the market that probably the optionality in earnings that we were looking for, the compound growth, compounding of growth that we were looking for may no longer exist for IRCTC. And I think that is one of the reasons why we have not seen the valuations go back to the levels that they were in October 2021, even though earnings performance has been quite good.
So it doesn't look like a very, very inspiring, promising future for the
No,
stock.
I think the future is bright. It may not just blind your eyes. It's just bright. It's not. It is warm. It's not sunny.
Oh well, words of wisdom there from my friend. Well, we move on to the next stock, Bharat Forge. Again, a stock under a bit of pressure. Some short positions were also built up that got covered subsequently. Now, in the case of Bharat Forge, the margins turned out to be less than what the market was expecting, and that was a big miss. But at the same time, you still have quite a few brokerages bullish on the stock, CLSA, Nomura and Morgan Stanley being among them. Now, the India business of Bharat Forge has been performing pretty well, and also the export revenues were at a record high this quarter. In fact, CLSA has raised its earnings estimate for the stock for FY24, and Morgan Stanley is of the view that new business will offset the cyclical risk, the new business being the aerospace division which is of the company. So, this should partly help offset some of the risks posed by the slowdown in the other businesses.
Well, Santo, I think, when the market has to look for a narrative in its favor, it will always look for a narrative in its favor. And when it's looking for a narrative against a stock, it can always find that. And in the case of Bharat Forge at this point of time, the narrative is in favor of the company because defense, of course, has been the theme of 2022. Everybody wants to own a defense stock, and Bharat Forge itself has been actually, if you look at if you hear their management interviews on business channels, you listen to the con call, all that they seem to talk about these days is the best defense business, the electrical vehicle business, the aerospace business, which actually do not contribute that much to revenues at this point of time.
But at some point they will see.
Yeah, no? I mean, I'm sure that is the hope. Of course, that is the narrative. Of course, that is the storyline, right? That one day they will become 50-60% of revenues, and the current business, which might be a legacy business probably, that might shrink going ahead. So yes, at this point of time, Bharat Forge is clearly riding that narrative. But the problem is that, Santo, I feel that given the fact that we have already risen 35% on the stock in the past 6 months, it's been a very brilliant rally on the counter. There is a possibility or an argument to be made for some bit of consolidation from here on. Maybe investors would want to see some bit of execution on those expectations and hope, and you could see some profit booking being happening on this counter. Apart from that, another key trigger for further re-rating for the stock would be the fact if the company can turn its international arms into profitable ventures. At this point of time, it is clearly in investment mode in those arms, but going ahead, it would hope that it could become profitable, and I think that could add to the stock's momentum. But if that does not come through, then you could see some derating happening. Well, the last stock on my radar today is Havells India, and you had asked for this, of course, in your comment section, a lot of you. So we thought that we'll take it up on the show. Now, yes, if you look at the numbers, they were quite subdued. If you look at the performance since the time the company's earnings came out about mid-October, the stock has largely fallen about 1.5–2% in the past 1 month. But if you peel through the onion, Santo, on Havells, you look at each segment, almost in every segment, growth was spectacular on a year-on-year basis. The company was able to achieve scale and was able to ramp up growth, accelerated growth in almost all of the segments, especially in comparison to a peer like, say, Polycab India, right? Which generally is probably at this point of time has become the gold standard within that space. Now, the problem the market had was the steep decline in profitability. But the management indicated during the conference call that in H2 they expect a lot of that decline in profitability to be corrected because raw material prices have come off quite sharply sequentially, and they will see some bit of pricing power in the second half, also because demand will also be very strong. And that is one of the reasons why Nuvama Wealth, formerly of course Edelweiss Securities, they have retained their buy call on the stock, and they believe that the company's margins will definitely catch up to peers like Polycab India in FY24, while at the same time revenues will continue their strong growth.
Well, CJ, I think partly besides the disappointment in numbers, the management commentary was also not very inspiring. The management had come on our channel a couple of weeks back, and among the things that the company had said was that they were unable to pass on higher raw material costs to customers. So clearly, this means that pricing power is missing at this point. Besides that, the company has also guided for slower growth in its electrical consumer durables business in the third quarter. So, there is another trigger gone. Besides, they have also flagged the fact that demand in rural markets is pretty weak. So, right now they are focusing more on tier 2 and tier 3 cities. So, you have the weak set of second quarter numbers. They have said that of course, margins will start looking up. In fact, Q4 of this year, that is the March quarter of this year, is when they actually expect the margins to start picking up. So, that I think has made the market a little cautious. You anyway saw a dip in the top line during the second quarter. So, I think the market is waiting for some kind of improvement. Till they sense it, I guess the stock could underperform, CJ.
Well, Santo, your last stock pick for today?
MCX, now good comeback by the stock over the last few weeks. Now, stock almost at a near 9-month high. Second quarter numbers have been fairly good, and this for the fourth quarter in a row that the top line has been steadily climbing. Now, over the last 4 quarters, CJ, top line has risen almost about 50%. Now, what's driving this change? The huge volumes happening in options trading. Because of peak margin requirement, some of the action has shifted away from futures trading, which earlier was the dominant chunk of business, and there was concerns whether this would then spell some kind of a prolonged downtrend for trading volume, but that does not seem to have been the case. Options trading seems to have more than made up for it. Besides the fact that you are seeing a lot of volatility in prices of gold, metal and crude, which are the most traded commodities on MCX. So, all this is helping at this point in time, and you are seeing a good uptrend in the stock as well.
Well, on Santo's bullish note, let's take a quick check in the market, because the market is really acting up. I think the bulls have taken offense to the fact that Santo, I called them lackluster and tepid earlier in the show, because if you look at the Nifty, now it's approaching the day's high. It's actually gone beyond the starting point at which it started the day, clearly higher by about 0.5%, and leading that action is the banking pack. The Nifty banking index is higher by about 0.5%, 0.7%, I beg your pardon. The Nifty auto index higher by about 0.7 to 8%, and the Nifty IT also showing some signs of legs as well, higher by about 0.3%, Santo.
Well, I think markets probably is right now getting into a dangerous territory for just one reason, I would say, CJ, is that it's just steadily going one way up. The trend is unmistakable. You see a bit of correction, but from there the market quickly rebounds. It's again kind of money for the jam for traders, right?
But
when
Santo,
this keeps happening too often, right,
Yeah.
and then the market gives a sudden jolt. That's usually been the case. That said, also CJ, if you look at many of the mid-cap stocks, again they have been pretty range bound, despite all the action, stocks moving, the indices moving up and down. Most of the stock, which is the fancied names and which is held in large quantities by HNIs and retail investors, those stocks, many of them have struggled. In that sense, the rally has been pretty narrow. So, it's very hard to make sense of this market, CJ.
Absolutely, I think, but the only difference to that argument, Santo, would be the fact that if you look at the quantum of gains or the momentum of gains, that has not been too fast and furious, right? We have only been inching higher at a steady pace, say 0.5% one day, 0.2% one day, 0.7%. It's not been a market where, you know, for almost 6-7 days, you're rising almost 1% on a daily basis, which kind of the likes of which we probably were seeing last year, when the market would for 3-4 consecutive days rise almost 1.5-2% each. So clearly, it is a very slow and steady sort of a climb, but climb nonetheless. And I think that probably also goes to show that there is also a lot of supply coming into the market, in the sense that there are as many buyers there's a decent amount of sellers also in this market. And I think that is why this tug of war probably could end up in the favor of the bulls ultimately, because it will at least not, you know, keep some sense of perspective for investors. It's not like there would be unleashed, uncontrollable exuberance in the market, and you could see overheating in the market, because I don't think this market at this point of time is overheated. I don't think that is the situation.
Well, time will tell, CJ, as always. And what are the key things we are keeping an eye out for?
Well, Santo, a couple of data points coming out, globally. In US, of course, tomorrow you will have the US retail sales data for the month of October, as well as the UK inflation data will come out. Very key economic indicators coming out from Europe and US. Apart from that, of course, we have the G20 summit ongoing in Bali. Any sort of outcome, any sort of news flow from there, from a geopolitical standpoint, will of course have some effect on sentiments across the world. So those will be the 2-3 things definitely to track for Santo going ahead.
We are really running out of things to track, aren't we, CJ?
Of course, we are in the we are in the middle of the month. Earning season is over. So of course, data points tend to get lesser and lesser.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Please do let us know what you thought about the show, and if there are any queries, also feel free to post them in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, there is only one place to be, moneycontrol.com. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.